Hi everyone, welcome to another edition of Stock Smarts Basics, where we answer a lot of the questions that you've sent via social media with the heart, the goal, the intent to give you a rock-solid foundation on how you can trade the markets with ease and confidence. So now, it's just very fitting, no, since there's a lot of volatility in the market, there's a lot of swings up, there's a lot of swings down. I got a lot of questions asking, why does this happen, especially for good stocks, especially for stocks that have a lot of fundamental value? Why do they have to swing relatively strong downward as well? This is, for those who've watched my videos on supply and demand, and for those who watch the videos on why markets move up and down, this is in conjunction to all of it. We've mentioned in the past videos that stocks drop because of more sellers coming into the market, and more sellers have different reasons on why they actually sell their stock, and stocks go up when there's more buyers leading the market, meaning so in a world where there's a larger demand, more buyers bring the prices up. Just think about it in a way, whenever you want to buy a product, when there's a lot of people wanting to buy it, prices go up for that particular product. But when it comes to a point in time when no one wants to buy it anymore, the product becomes not as, I guess, hyped up, or not as everyone has it already. The prices of that would go down, because why? People who sell it just so they can dispose of it will sell it at a lower price. So that's what's happening also in the market in any given moment in time, when more people are selling, regardless of how good the company is, regardless if it's Ayala Land, regardless if it's Globe, regardless if it's BPI, SM, Jollibee, Pure Gold. No matter how fundamentally sound it is, if people sell, the scales will tip, and you will see the stock retrace and go downward. And that's the very reason why I wanted to make this video, because here in Seoul, I saw this, which is a typical depiction of how markets would work. Look at this. This is a very, very old and very traditional way for them to bring water, or I think water gets generated and it passes through this wheel. So why am I saying this? Look at this upward portion. It hits a certain portion where the wheel turns and scales back down, and as it goes down, it scales back up. You look at the market in that fashion, you look at the market in that way, when more sellers are present, when people just want to dispose the stock, you see it as a portion of the market that's over here, that it's scaling and going back down. But however, what drops hits a certain level where it becomes too cheap to ignore, and then suddenly the scales start to tip again, and more people start to buy the stock, and it goes back up. So think about it, think of the market as something that moves like that. So you become less emotional, because you now have a conviction, you now have a foundation that there will come a point in time where the stock becomes relatively cheap, and as it becomes relatively cheap, it becomes too cheap to ignore, that people will just come in and buy it, and there will come a time also that it drops because people are just wanting to sell the stock. So that's it for now. More videos here in Seoul. I hope this video helps you trade well, trade strong, and trade smart. See you all again soon.